Today, I want to talk about something that has hit pretty much all the headlines in real estate and finance, and it's the bank collapse. Signature Bank, and it's the Silicon Valley Bank that recently collapsed due to funding issues and running out of money. The reason this is a big deal is because a lot of Americans are very fearful. When banks start having issues, everybody starts to hit the fear button. However, how it relates to real estate and other industries isn't necessarily a negative at this point. We do have an issue with the banking system, no doubt, and the government has stepped in to help out, and hopefully that gets resolved. However, in terms of how it has impacted real estate, there's a couple different ways that I'd like to discuss today. The first, over the last week, all of the headlines about the bank collapse have been discussing the need for putting your money in real assets. If you put your money into real assets, things that the banks don't have control of or that the government can't come and take, it's going to be a much stronger investment. And real estate is one of those. If you have your money in real estate, and if you have it in housing, if you have it in investments, if you have it in short-term rentals, if you have it in REITs, just multiple different things and ways to invest in real estate, your money's going to be a lot safer when these banks have issues. This really hasn't affected the big banks in America, and we're talking about Goldman Sachs, US Bank, Wells Fargo. The biggest of the biggest have the most security and they have the most insurance when it comes to this stuff. However, whenever something like this happens in the economy, people start to panic. And I'm here to tell you today that I think it's actually going to not affect the real estate market too much. And in fact, in time, I think it's going to help the real estate industry because when you own a home, you own that home. They can't take it away from you, even if a bank collapses. The other thing that I think it's going to do is I think it's going to drive interest rates lower. And people are like, Parker, what are you talking about? But the reality is the federal government cannot afford to raise interest rates right now to affect the differences in the bonds that were being bought. If they did so, it would make the banks even worse off financially, and more banks across the country would start collapsing or they'd start going under. All of this was caused when interest rates started skyrocketing because the banks were buying bonds. So what I think is going to happen is I think that as the Fed step in and the banks start to get some help, they're going to start driving those interest rates back down a little bit. And we are due for a recession anyway, but with this news and with what's happening in the industry in general, I think we're going to start to see rates go from 7 closer to 6 in the next few months. By the end of the year, they might even get into the 5s. So if you're looking to buy or if you're looking to transact real estate right now, know the facts and what's going on in the market and know where those interest rates are going and what is supposed to happen versus just what you think is going to happen. We're always here to answer questions. We're always here to tell you what's happening on the micro level in our marketplace, whether you live in Apple Valley, Plymouth, or Minneapolis. Every market is different and every market is being impacted differently. But reach out if you have any questions. We'd be glad to answer any questions and help you along the way. This is Parker Pemberton with Pemberton Homes. Talk to you soon.